These two stocks seem like they go up every day recently. Both of them over the past 6 months are up over 100%, and one of them is up over 200% in the past 6 months. These two stocks are SoFi and Palantir. SoFi is now sitting at $16.41. That's up 137% in the past 6 months, while Palantir is sitting at $67.08. That's up 209% in the past 6 months. These two stocks have had a crazy run, but it wasn't always like this. This is a recent thing for these stock prices to actually get love from the market. There were many months, many years where both these stocks were down day after day after day, and then they stayed low for a very long period of time. And a lot of people thought these are joke companies, they're never going to move up. People lost patience in the company. But if you were a fundamental investor and you were buying SoFi and Palantir at those low prices, Palantir and SoFi both in the single digits, Palantir in the higher single digits, SoFi in the lower single digits, you have been rewarded very well on both these stocks, and it's been quite a fun ride. But it wasn't without the pain of the stock dropping like crazy and then being stuck in those low ranges for many months, and in SoFi's case, multiple years. I took a quick scroll through my purchase history for both Palantir and SoFi. The lowest I ever picked up shares for Palantir was $6.04. And the lowest I ever picked up SoFi was for $4.50. I would love to be able to pick up Palantir for $6 again. I'd love to be able to pick up SoFi for $4 again. That was an absolute blessing that we got the stock that low. The reason I say that is because the fundamentals were getting stronger and stronger and stronger, especially for SoFi. Palantir, as we'll look at in a second, actually did have revenue growth rates dropping in a major way. There was a lot of other things that were going really well for Palantir while those revenue growth rates were dropping, but they were dropping, and we'll check that out here in a sec. But let's focus on SoFi first. I kept buying the stock as it kept going lower, and it kept going lower, and it kept going lower, and I wasn't concerned whatsoever at all about the stock price being lower. In fact, I was actually excited that the stock price was lower because the fundamentals were getting so much better. Literally every single quarter, they were having a record quarter. And up until this past quarter, they've done that same thing. Almost every quarter they've reported, the entire time I've been a shareholder, has been a record quarter for SoFi. They've gone through multiple development cycles while I've been a shareholder, and we're now at a point where they're not just a loan company. They're not just doing student loans. They're not just doing personal loans, but they have a mix of lending, financial services, and tech platform. When you take financial services and tech platform, that's 49% of the total revenue, and when you take lending, that's 51% of the total revenue. So they're pretty much split between lending as one, and then tech platform and financial services as the other 50%. It's very impressive that they've been able to diversify the business in this manner while we've had such a weak economic time with record high inflation and with the consumer being in a very weak spot as a result. And then Fed raises rates like crazy, puts the consumer in an even worse spot in order to fight inflation. And it takes many months for inflation rates to actually get back down to a point where the Fed is now lowering rates. They have gone through their first stressful cycle as a bank, and they flourished inside of it. Check out the growth rates of this company since I've been a shareholder. Since I've been buying the stock, we had 100% growth, 34%, 63%, 61%, 52, 51, 57, 46, 37, 26, 36, 37, 20, and 34 up until today. That's just revenue growth. In that time, they've been able to diversify the business. They've been able to flip from massive net losses to net profit, and that's multiple quarters in a row. They've got positive net income now. And it's possible that the S&P committee goes ahead and picks SoFi to replace one of the many regional banks that's inside the S&P 500 right now. That would be a massive day for SoFi shareholders and a huge feather in SoFi's cap. But the reason I kept buying on the way down is because the fundamentals kept getting better and better and better and better. And I felt like we were getting to a point where it was just a coiled spring. And the lower the share price went and the better the fundamentals got, the more compressed the spring got. And the spring is going to explode one of these days. And the stock price is going to agree with the fundamentals. The stock price is going to catch up with the fundamentals. That's what we're seeing now. That's why we've seen the stock go on a crazy run over the last 6 months. It's not because the stock's fundamentals just now got to be in a great place. No, the fundamentals have been getting better and better and better, and the strongest they've ever been literally every single quarter for the past many, many years. It's taken many years for the stock price to catch up with the fundamentals. A long-term focused investor that's worried about the fundamentals, that checks those earnings reports, listens to the conference calls, they knew this all along with SoFi. They were not worried whatsoever at all as a SoFi shareholder. They were just ready for the rocket ship to take off, and now it has done so, and it's been a great ride with SoFi. If you're buying a stock and the stock price is going down because the fundamentals are weakening, that is not a stock you want to increase your position with. But if you hold a stock and the stock price is going down, but the fundamentals are getting better while the stock price is going down, that is a stock you want to buy. That is a stock that's going to get the respect from the market, assuming the fundamentals continue to improve. And if the share price stays down and maybe it keeps going down, you can get better and better and better deals on that stock while the fundamentals are improving. You're getting more value for your dollar as the stock price comes down, assuming the fundamentals are getting better. That is the main key here. We got to stay fundamentally focused. Now, Palantir is a little bit of a different story. They actually had their revenue rates start to fall in a major way. I've owned this company for pretty much the same amount of time I've owned SoFi, so we'll check out from Q2 of 2021 until now for the growth rates. 49%, 35, 34, 30, 25, 21. We can see that this is dropping in a major way down to 17. 17 again, it hit a low of a 12.5% growth rate on revenue, and then they started to climb back up. 16.8, 19.6, 20.7, 27.15, and now 29.98% growth. So those growth rates have accelerated massively. But the thing that actually started to move the stock price in the very first place was the company flipping to very consistent profits. They have hit GAAP net income positive every single quarter for the past many quarters. And it was only a couple quarters after they hit net income positive that they hit operating income positive. And that operating income growth has been absolutely ridiculous. So before the revenue growth rates started to accelerate, they actually became a profitability story. And that was really important for Palantir because it opened up a new shareholder base for Palantir. People like myself who were buying the stock at $6 and they see the stock is about to flip to profitability, we were very excited to buy more shares because we've got profits about to come in for the company. We've got a SaaS company that commands extremely high multiples, and the macroeconomic environment was getting better for B2B business, and that's the market Palantir was in the process of growing. They were a major government contractor for a very long time, but the more they focused on the commercial side, the more the stock has started its upward roar, because that's really where the massive growth potential comes in. So while the stock was falling, the company became profitable on a net income basis. The company became profitable on an operating income basis. The company's revenue growth rates started re-accelerating and moving back in the right direction. And they released new products and signed crazy massive government and commercial deals. So a fundamentally focused investor like myself, or maybe like you out there, was buying like crazy in the single-digit range. Not every stock that has its stock price crumbling is a buy. A stock that has its stock price falling while the fundamentals are improving, that stock is a buy. That's what we saw with SoFi. That's what we saw with Palantir. And that's what we see with many companies that we've had success with over the past many, many years. I will keep searching for these arbitrage opportunities. And the first place I post about these arbitrage opportunities is actually in the Patreon. So we've got 48 members in there now as of recording this video. We'd love to have you in there. I just made a post about Nubank stock, ticker NU, and whether or not I'll be opening a position with that stock and what percent allocation in my portfolio that might be if I was to open a position. Go ahead and check that out with the link in the description. We'd love to have you in there. Let me know if you own Palantir. Let me know if you own SoFi, and let me know if you own any other companies that you've had the stock price falling in a major way while the fundamentals were improving in a major way. I want to hear about some of your successful stock picks in the comments, so go ahead and brag on yourself. Let us know which stocks you've had major wins on recently or any major wins you've had in the past. I want to hear about it. Let us know in the comments below. Definitely one of my favorite parts of posting here on YouTube is talking to you guys down there in the comments and having some conversation down there. I appreciate you being here in a major way. Thank you so much. Have an amazing day.